The broadcast is now starting. All attendees are in listen-only mode.
Well, good evening, ladies and gentlemen. Thank you for being with me today. And as usual, it's great to see all our old friends here. We have a good core following, as you know, but we also have a lot of new people today and some faces from the past. Adrian down in Adelaide. Nice to have you with us. And Alan Varian, my mate up in Brisbane, who told us to come here to Tallow, very nice. Alex Shkarup, I haven't seen you for a while. Chase, of course. Yes, I'm still smoking, Chase, but it's on the agenda. Daryl over in Mossman, good to have you with us, mate. Webby, the king of the black lines. Harold Foos, the gold bull from Redding in California, good mate of mine. Huey Sinclair, great. Jan, Jeffs. Johnny Barnes up in Canada, the Woolies down in the Hunter Valley. You had plenty of rain down there, guys. We had 6 inches in 6 hours here the other night, but oh boy, we need that. It's a drought interspersed by the occasional thunderstorm up here, and we haven't had a decent rain since December. Anyway, we're soaking in it now. Marbino, Mike, the doctor, the mad doctor from Chicago, our gun trader, Mike Murphy, who's doing a tutorial, and we'll soon be joining that group. Everyone. Rose. Hello, Rose. Happy to have you with us. Sue's here with us from Gann. She's doing a tutorial. And let's see who else. Got lots of other people here. Terry's with us. Gosh, Terry, good to have you. Thanks for the banner, mate. It was great. Hope you can hear me all right. I don't think you're on Skype. If you are, can everyone hear? Yes, he is. Yes, he is here. He can hear me. That's good. That sounds good. Everything's good. Tim and Trevor and Johnny Barnes says sounds good. That's it. Okay, folks, thank you for being with us. Oh, Tom from Florida, the broker. A lot of stuff here for you, Tom, today. And good to have all of you with us, folks. So today, I want to tell you about the real trading game. I've been in this business now I've been trading either stocks and shares or futures for, I guess, 50 years, and exclusively for futures and Forex for 30 years now. Pretty close to it anyway, might be 26, 27. And there's nothing I haven't seen or done, so I'd like to I'd like to tell you some of the real truths about trading, which you don't always get. It's so interesting talking to clients and people who are doing tutorials, the ideas they have, and where they get them from, it's always interesting, the difference between what the media portrays and the reality of trading. And the media, of course, is pretty quiet about futures trading. They're focused on stocks and shares, and basically, it's all a big game. I've said to you before, whenever you read an article, if all of you still read these days, most people, it's sort of videos and what they call recordings you listen to. But wherever you're getting your information from, always ask the question, the person who's creating this material, writing it or recording it, what's their purpose? What's their aim? What's their interest? Well, of course, for media, their purpose with all financial reporting is to create a good environment for their clients to advertise with them. It's a bit like the real estate game. It's why you never or almost never hear anything negative about real estate markets, because one of the biggest sources of income for media is advertising of real estate. And in the same way for financial markets, the advertising is a huge component of media. So always ask yourself that question, and when you've got the answer, you'll be able to put things in a better perspective. And today, make sure this screen has changed for you. Yes, it is. I want to tell you about an unusual journey. What I want to tell you is about my trip to trading futures, and how I came to be doing what I do now. I had got to a stage in life where I was bored with stocks. I used to trade stocks with my father. I've been trading stocks since about, 16, 17 maybe. My dad was a great one for the stocks, and I used to trade those with him. And I got bored with those, and I'd also got a bit bored with the practice of the law. I had a law practice at North Sydney, and I've been doing that for a long time, and I was bored with that as well. So a friend showed me an advertisement for futures trading. This is in Australia. And the advertisement was by a gentleman called David Bowden. I can hear all of you Australians here chuckling loudly because he hasn't missed many of us. And Mr. Bowden, who was a used car salesman by his trade, had become a Gann fan, W.D. Gann, a prolific Chicago stockbroker back in the day, and a prolific writer. Wrote a large number of books, and was the first real promoter of futures and commodity trading. And Gann used to travel around America, putting on these lectures and shows, and he was a terrific promoter, got a lot of promotional material in the newspapers, made a huge reputation for himself, and started quite a cult. There's a whole lot of people even today who are Gann fans, by which I don't mean the technical study. I mean literally they're fans of the late W.D. Gann. And Mr. Bowden was his chief component. Tim Albert got me. Yeah, he got me too, mate. Don't worry about it. And I mean, there's a Mr. Bowden's dead now. I've got a highly defamatory story about him, but it's not really defamatory. It's just the truth. Just stand by a minute, folks. Excuse me, another beautiful summer day down here in the Gold Coast in Queensland. I had to just turn the air conditioning on. What's he say? Hello, Tony D up in Chicago. I sorted out your problem with the subscription, mate. Thanks for that. Yeah, Tim says he's still going. All right, I thought he died. I know he had Alzheimer's. But anyway, Mr. Bowden's a great promoter, as you'd expect a guy from a used car background to be, and he sucked in an awful lot of people, including me and Tim and a few of our other clients. And what he was promoting and teaching was the work of W.D. Gann. I am the world's expert on W.D. Gann. I'm sad to say, I really do think I'm the living exponent of Gann. I spent 10 years searching for the mysteries of Gann. I have all of his courses, which were certainly cost a lot of money, thousands, 2,000 or 3,000 for each course. I'd have 8 or 9 of them. The charts, there's a company associated with Bowden called Gambit Land that would sell you genuine, serious reproductions of Gann charts. I went a bit further than that madness. I had agents in California and London trying to buy original Gann letters, and Peter King as well, guilty as charged, until I realised he was feeding the chooks. Anyway, look, long story short, I had a bad case of Gannitis, and I had agents around the world trying to buy me his original letters, of which I have a few, and then I bumped into Safarial, Dr. Walter Gawn Old, who was a medico, and he was one of the leading astrologers at the time in the UK. And Gann, of course, was in the States, but what was enforced then was what's called the Buncombe Act, named after, I think it's Congressman Bunker, might have been Senator Bunker, and that's why it's called Buncombe. It was named after the guy who introduced the legislation that stopped any promotion of the occult and horoscopes and stuffs in America. And Sepharial, Sepharial, you can Google him. He was using astrological charts to forecast market movements, and quite extraordinarily, he did get it right on 3 or 4 significant occasions. And they were also using numerology and all that stuff, and allegedly won the Cuba lottery, the biggest lottery in the world, 4 or 5 times, none of which actually equates with the fact that W.D. Gann's alleged to have died with a huge estate, and that's just not true. Anyway, so I went through that and did the courses, and then there was a $7,000. It was the next step up. You paid Mr. Bowden $7,000, and you did the next course up, and then after that there was a $23,000 for a 3-day tutorial up at the Sunshine Coast. So you can start to add that up and multiply it by fairly large numbers. You can understand that Mr. Bowden certainly made a great deal of money. From there, after I'd sort of realized that that wasn't going to produce for me the results that I was looking for, I graduated to the big time. And I started going to the States, mainly, one in London as well, and traveling to go to tutorials by all the big names you can think of, and the most notable was a number of them in California at and elsewhere at $10,000 a pop. And this was 20 years ago. I can tell you $10,000 was US dollars was a bit of money back in the day. And I finished up with a garage full of Gann charts, his famous number charts, you know, stick a pin in the middle, put an arrow on it and spin it around, find the number. And for me, nothing worked well enough. So I don't wish to defame the whole of the teaching profession. I'm sure some of the people I went to for lessons and bought their material are very, very clever men. But for me, at least, it never worked well enough. That is, like most of the traders who come to me to learn, I had good days and bad days, but I never had sufficient success to build a powerful equity curve, which is what this business should be about. So life went on with that, still terribly keen and trading real-time data, daily bars, 5-minute bars, 3-tick bars, you name it. I've done everything. Then it came a change. I was getting disappointed with my trading. I'd spent a number of years and a whole lot of money, serious money, chasing Gann and then chasing these other gurus. And I can remember saying to someone at the time, you know, I've spending so much time on this trading, I'm not being fair to my law partners, and I've either got to try and work out what really makes markets turn, or else I've got to give this away and get back to practicing law a bit more full time. And about that time, don't quote me on exact dates. It's all deep in the past now. But about that time, my mother died, and that had a profound effect on me, as I guess it does for many of you as well when you lose a near and dear loved one. My mother was a Church of England gal, as we were. The family was sort of really the original C&E. Christmas and Easter was about the only time a church ever saw us. But she got converted to Catholicism and got converted by the Jesuits, which is not an easy thing. It's not a matter of putting up your hand and saying, I'd like to be a Catholic. You've got to go through a pretty severe induction process, certainly with the Jesuits. I remember her taking off to the Sydney Cathedral for her tuition lessons twice a week. That seemed to go on for a very long time. Anyway, so that the story finishes sometime today, I should move on and say that she died. When I was going through her effects and tidying things up afterwards, I had a look at a prayer book, which she had with all her personal effects. And there was a note in there that said, the answer is in Matthew or Daniel. Now, at that time, I had not read a Bible, I don't think ever. And my last religious education was at Sunday school, age about, I don't know, is it 3, 4, or 5? That would be about the extent of it. And even though I went to a Christian school, Cranbrook, there wasn't a whole lot of Christianity there. It was pretty much C&E sort of stuff. But I saw this note that she'd written, the answer is in Matthew or Daniel. And I was still fixated on trading, mainly frustrated about how up and down it was, and how good signals were sometimes good and other times good signals were dismal failures. And I really didn't have an understanding of why markets did what they did. So I started reading Matthew, and when I finished with that, I started reading Daniel. And I've always been very cautious of words, of language, because being a lawyer, I'm well aware that words in our language anyway, and also the same in other languages, can have different meanings, and they can be spelt differently. There's all sorts of things you can do with words, and for that reason, I was more focused on numbers, because numbers are the true universal language of man. Everybody, no matter what language they speak, and what dialect of that language, and there are hundreds and hundreds. I mean, occasionally I watch UK shows on BBC, and some of those Welsh and Northern England accents, I mean, I literally can't understand what they're saying. So, and that's in, the most basic of languages, English. Once you get into foreign languages, I'm sure it gets a whole lot more complex. And we always seem to spend a lot of time, the television time here, not that we have a lot of it, but seems to be on Fox News a lot. And I noticed even that some of these country singers that come on during instead we don't have to put up with the commercial breaks over here. So when you guys are having a commercial break, they put on a filler, which is either Dr. Manny with health advice or some kids singing, and often it's country music, and some of the accents from the deep south, I can't understand what they're saying either. So I was very cautious about words, but I was excited about numbers, and I started pulling out the numbers that are in the book of Matthew and Daniel, and I started scrutinizing them and trying to break them down. All the normal things you can do with a complex number. You can take out the fractions, you can cube them, square them, get the square root of them, manipulate them, make sequences out of them. Eventually, in chapter 12 of the book of Daniel, I came across the first thread. In that chapter, for those of you who want to read it, we have Daniel, who's been fasting for 3 weeks, and he's down by the river, and he has a vision. A figure like a man appears to him and standing on the waters of the river, and he raises his left hand and his right hand unto heaven, and swear by him that liveth forever, it shall be for a time, times, and an half. And that was the first thread, and I noticed how often ranges in markets are repeated. They don't always exactly repeat, but they rhyme. And I noticed how often a half was a common retracement value. And I was terribly thrilled by that. I remember I ran downstairs to my wife and said, "Eureka, I have it. This is it. This is the silver bullet." Of course, it wasn't. It was nothing of the sort. It was just the first thread. And the more you pull on the thread, some of it comes out, and some of it peters out, and some of it turns into knots. So this journey I'm talking about is probably going to cover 5 or 6 years, at least. In fact, the journey's still going on. But once I started and worked out the Daniel Code ratios from the book of Daniel, written 2,600 years ago, ridiculous as it sounds, I was able to start creating real market targets. For those of you who haven't already done so, I do urge you to go to the Daniel Code website and take a look at the chart archives. There's about 34,000 members' charts archived there that I've created since we released this to the public in late 2008. And what you'll see is that it is almost impossible to find a market that turns anywhere except at a Daniel Code number. And I think the Daniel Code numbers are the most important part of the Daniel Code and the least used, which is kind of funny, but that's really what we see. So what I was searching for was the Grail. I was searching for the answer to all markets, the universal answer. And for trading price, there's two entirely different disciplines within trading. One is trading price, the other is trading time. And for trading price, the Daniel Code targets were the real elephant in the room, because without those, there's no clarity on markets. Indicators, and we use very basic ones, but there are a lot more sophisticated ones. Doesn't mean they're any better, just means they're more sophisticated and more complex. But all studies are simply indicators. That's why they're usually called indicators. But once you add the Daniel Code numbers, you get a high degree of specificity. In other words, it gets very specific. And that was the big deal of those years. Then time went on, many years went on, and I'd got that, so I was moving on. And eventually I started to find the fourth seal. And that led to the search for time, trading time, which is an entirely different discipline. Let's wait for the page to change for you. And that was sort of the journey I went through. So I can assure you all that there's nothing that's happened in your trading life that I haven't also experienced. I've been a beginning trader. I've been an educated trader. I've been educated by the big name traders, and nothing worked well enough, which is why, for me, it may work for you, but it didn't work well enough for me to build a consistent upward curving equity curve, which is why eventually, out of sheer frustration, I was forced to go into this study to find the Daniel Code, and the Daniel Code numbers control all markets in all time frames, both on the vertical axis, which is price, and the horizontal axis, which is time. So let's talk a bit more about the nature of trading. Futures are derivatives. In other words, they're not a thing of themselves. They're a device or a construct that is created, and the price is derived from something else. It's derived from the underlying commodity. So think about futures in the simplest form. In America, they were started in grain markets, beef markets, particularly the grain markets were the early markets. They're much, much older than that. We have got written futures contracts for opium in China when the British were running the opium trade there. And of course, the first formal market for futures was the rice trade. And you can read all about that. If you go to the Daniel Code website and click on articles, you'll find that there's an article in there about the rice trade and a very famous trader of futures. And that was, in fact, the start of candlesticks. They were invented specifically for trading rice in the rice futures market in Osaka. But the purpose of futures contract, they have a very real financial and social reason. What they do is they give a level of price protection to producers and a level of price certainty to users. So in other words, here's the farmer. He's got a wheat crop in the field. It's growing well. He thinks he's going to have a decent crop, but he's months away from harvest. But the price looks attractive to him. He can sell a futures contract against the future delivery of that wheat, and he can lock in today's price for some or all of his crop on a futures contract. And that's why the biggest future market CBOT, Chicago Board of Trade, and the CME, they're merged now, Chicago Mercantile Exchange. They both grew up in Chicago because it was close to all the big grain producing areas. It had trains coming in, and it was the delivery center. When back in the day, if you had a futures contract, you had to deliver your product, usually to Chicago. And that's the origin of those big exchanges. So you have three people involved in these futures contracts. You have the grower or the producer. A guy might be fattening his cattle, or he might be growing grains. Then you have the end users, the millers. They want to have themselves some price certainty. They like to buy a futures contract, so they've got that many bushels of grain locked in at a known price. And that's why we have different expiry times in these markets, because in those sorts of markets, they're timed to work around the harvest, the old crop, the new crop, and the delivery to the millers for grain, the seasonal requirements. So they can buy, the grower can get a fixed price for some or all of his crop. And the users, the end users, the millers, they can have certainty that they have delivery in this month and that month and the next month and so on. And then in the middle of those two entities, they're the main players in this, are us, and we're speculators. And we are making bets on price movement and trading the fluctuations in the contracts, which usually don't fluctuate that much, but there's so much leverage in futures contracts that the futures contracts do move enough to make them tradable and profitable to those who know how to trade. From there, we went on quite recently, much more recently than you'd think, to start having futures in financial instruments. US T-bonds was as recently as, I'm going to say, the 1950s. And equities as well. When you trade a S&P futures contract, you're actually trading on the price of the S&P basket of stocks being traded at the New York Stock Exchange. So the futures contract is derived from the prices of the stocks. And as well as that, we trade spot Forex. It's a spot market, a present price market. But you can exit at a later stage, days, weeks, months, whatever you like, and you get the same way. These currencies actually don't move that much, but with the leverage that's available, they do move enough in the Forex version to give you profitable opportunities as a speculator, speculating between the producers and the end users. Lately, there's been a big move against Forex. There have been some pretty spectacular failures in the Forex market because it hasn't been regulated. And this isn't a dig at Forex. I mean, Alpari, you'll see here, was one of the main ones. It was one of the biggest Forex companies in the world and had offices, 157 offices, I think, from their marketing, and they consider themselves a very upmarket Forex platform. They were sort of sponsors of Longines show jumping things and America's Cup racing, in other words, trying to position themselves with very elite, wealthy people. Then a couple of years ago, we had a sell signal in the Swiss franc. A lot of you remember this. And the Swiss franc was pegged against the US dollar and been pegged for a number of years. And the Swiss bank guaranteed that that peg wouldn't be broken. So we had a sell signal, and the markets went down, and I assumed, like everyone else, that the Swiss bank could hop in and support them at the peg at that level. But they didn't. The peg failed quite unexpectedly, and those contracts were worth about 32,000 per one contract. And the next morning, all hell broke loose. A lot of people didn't get filled. A lot of people couldn't get out. A lot of people had all sorts of red ink. They thought the peg was going to hold and bought it 5 ticks above the peg, and it didn't hold. And Alpari, one of the major Forex platforms, didn't open its doors. They were broke. And what they were doing is they were taking the other side of the trade. In other words, they made the assumption that with all the advantages that the house enjoys in Forex trading, this is an unregulated platform, the spreads between the bid and the ask, which is how Forex brokers and platforms make their money, is so big that essentially they can hit both sides of the trade without the trade actually happening in extreme circumstances. That doesn't happen often, but we've seen it happen with some of the biggest names in Forex platforms. So what Pari were doing is you were putting on your trade and they were assuming you couldn't win, and they were just taking the other side of the trade. So they were actually pretending to be a broker, but they were actually standing as principal. And then after a while, they woke up to the fact that some people actually did know how to trade. So they had A book and a B book. And all you guys who are newbies went into the A book, and they continued to just take the other side of the trade. And people like me went into the B book, where they laid off part of the bet with their bankers who were providing their liquidity. And you even got to having a C book where they wouldn't hold any of your trade. If you're in the C book, you get your trade laid off entirely. Anyway, long and the short of it, Alpari couldn't open their doors the next morning, and a few others couldn't as well. And that forced the US to step in and start to regulate Forex platforms. So the Forex platforms in the US at least, but not elsewhere, not universally elsewhere, maybe occasionally, they are required to have substantial equity. They've got rules they follow, and they're audited. So Forex trading on the big US platforms is now very much better than it used to be. But I have to tell you, there's a big move away from Forex into currency futures. And the CME offers, Chicago Mercantile Exchange offers futures contracts, on currencies. They work exactly the same as Forex. They trade exactly the same, but they're regulated and they're all coming through one exchange. There's not an unlimited scope of those contracts at the moment, but those of you who are trading Forex, I suggest that you start looking at currency futures because that's the push. For Forex is it's huge in Japan. I mean, it's the game in Japan. Other parts of Asia as well, but certainly in the US, the push is away from Forex and into futures, which themselves, let me tell you, are not immune from their own problems. Not so long ago, we had John Corzine and MF Global costing, they were using the punters' funds. These accounts that we open, that money, client accounts, are not supposed to be commingled. That's the cardinal rule, the golden rule, and MF Global certainly broke it. And then not too long after that, we were hit with PFG, Peregrine Financial Group, where their boss had been using clients' money for many, many years, and there was a massive shortfall, and he tried to kill himself, not very convincingly. If you really want to off yourself, parking in the chairman's spot outside your main office with the receptionist looking down at you, you're unlikely to have enough time to do the job if you're sitting there sniffing gas through an exhaust pipe. Anyway, he survived, and it was a huge scandal, and the effects of that are still being felt today. One of the things that came out of that, incidentally, folks, is that the futures accounts will been substantially made good, taken a long time, and will probably be made good entirely. But the US courts held that Forex was not a commodity within the meaning of the Act, so it wasn't covered by the CFTC funds and reimbursement offers such as they were, which might be another reason that most of the brokers in the US are pushing Forex clients towards currency futures now. But it just shows you that this regulation of the markets is absolutely essential. You'll remember the case of Bernie Madoff, who was a giant multi-million dollar fraudster. And Bernie got away with it primarily because he was so well known and well liked in the industry. He'd been on the board of the NASDAQ. He was a leading player in the industry, and the regulators, tend to give him a pass mark. In the same way, PFG, their owner, whose name escapes me now, he was awfully well respected. He'd been on the board of several of the brokerage the members, the brokerage groups. He was certainly well known, very well regarded, well liked. And the same way, he got away with a ridiculous scam. He had a post office box and instructed the bank to only send the statements to this post office box, which only he had a key to, and he picked up the statements and falsified them and used all these internet tools that you can use to change documents, and got away with lodging all of those at the CFTC and other regulators. No one picked it up. The question was, a firm of that size, and they were one of the major players in futures, what the hell were their internal accountants doing? Like Madoff, they had a small out-of-town one-man, in this case one-woman auditor, who was either, willing to turn a blind eye for the money, or more simply just didn't want to rock the boat, no matter what the suspicions might have been. But what were all those auditors that worked for the company doing? What were all those accountants doing? I mean, how do you put your hand up to say I'm the chief accountant or one of the managing accountants, and I don't actually get the bank statements from the bank? They're delivered to me by my boss. I guess it just didn't raise flags for them. So we've had our fair share of disasters both ways, and I'm sure that all of them are great learning lessons, as long as you're not involved in it. That leads you to the nature of brokers. Remember that almost all the brokers you deal with are what we call introducing brokers. They're not the people who have your money. It's much more rigorous for the ones who do hold your money, even though it didn't work with MF Global or PFG. But your broker is basically an agent, and he's clipping the ticket and pushing your order on to one of the bigger firms. Brokers, by and large, are terribly well-meaning. We have a number of them as clients. There are a number of them on this webinar today, including Tom down in Florida, and Tony up in Chicago, and a couple of others. Jerry might even be here. They're awfully nice people. They try hard to do their best for you. But by and large, they don't know a lot about trading. So let's move on with some of the thoughts on this. And these are some of the things I hear about trading. And there's a lot of negativity around trading, and it comes from ignorance and fear. The main one, the first one I usually hear is, trading's gambling. And my answer to that is, yes, it is. It is gambling. One of the reasons I got interested in trading is I used to be in the horse racing business. I raced a lot of horses, and then I got a stud and started breeding them, and I got stables and started employing trainers to train them, and I had years and years doing that. And handicapping horses, their odds, their prices, if you know how to do it, is a very much more technical business than analysing charts. But trading is gambling, and you shouldn't be dropping dead at that thought. Most everything you do is a gamble in one form or another. Every time you cross the road, you're taking a gamble. Life is full of risk, as is trading, but successful people manage that risk. You'll often hear the statement that 70% of traders will lose their first bank. My observation is that 99% of traders lose their first bank and their second bank, because it's a weird business from the private side of it, that it's the only business where otherwise successful people think they can be successful with no training and very limited knowledge. And I can understand that, because as an attorney, I assumed that you could learn all about trading from books, from seminars and teaching, and from a big dose of practical experience. That's how you learn the law. That's how you learn the other professions. That's how you learn trades. Someone shows you, you learn from seeing and then listening, and then you learn from doing. But it's not so, because I've done almost every trading course you could think of. Which I certainly read more trading books than anyone else I can imagine. And I didn't learn to be a successful trader with any of that. But managing risk is inherent in all things. And if you learn how to trade properly, you can manage your risk in trading down to a very small amount. And what makes our sort of trading, futures trading and Forex trading, so desirable is because of the leverage. These markets don't actually move that much on a net basis, but occasionally they'll have big movements, but most of the time they're trading within a larger range. But it's the leverage that's built into these contracts that makes them so profitable. But leverage, of course, cuts both ways, that you leverage going up and you leverage when you're having a drawdown as well. So you can lose your money very, very quickly if you don't know how to do this. And it's a funny sort of business. It's the only business I know where the 80-20 rule doesn't apply. You would expect, if this was like any other business, that 80% of the profit would be made by 20% of the players. And that's not so. It's more like 95% of the profits made by less than 1% of the players. There's a very, very thin peak on the knowledge base, and those who are good at it make an awful lot of money. In fact, I'm going to tell you later on that you can make more money trading than any other legal endeavor that I know, including law, including medicine, including anything else you can think of. And you can do it consistently, and you can do it simply. You can do it from your home, and you don't need the overhead, the flim-flam. You can have half a dozen secretaries as well if you enjoy looking at pretty girls wandering around the place, but you don't need them. It all comes from your own brain. The next thing that I keep hearing when I started off in this business, don't overtrade. I can remember going to one very famous celebrity trainers seminar in Southern California. Rancho de something or other was a brilliant, beautiful golf course and resort. It wasn't Rancho Santa Fe. That was the residential development right next to it. But it was around there, down that part of the world. Some of you from California will know about it. And I got down there for the first of a number of tutorials I went to with this chap, who I know personally, who I like. I love to have a drink with him. He's a great fellow. He's been a great trader. He's a very celebrated trader because he's such a good marketer. But this was one of the $10,000 seminars 20 years ago. It was a lot of money. Might have been 18 years ago. And don't overtrade, was the first thing he said. This particular system he was teaching us will trade 6 or 8 times a month, and that's enough. You shouldn't be trading more than that. I also went there with huge expectations as to how much money you could make. My idea was if you were going to do this for full time, you needed to make a whole lot of money. And despite what I've been led to believe by the puff and the PR, when we got to the seminar, he said, what can you make? He said, that's not a realistic aim. Banks will pay you about 5, or Rancho Bernardo, was it Kurt? No, it wasn't, but you're close to it. It's a very fancy golf course, golf resort. And it's next to Rancho Santa Fe, which is an interesting place. Rancho Santa Fe was, now it's a very, very upmarket, very expensive residential resort down there in, what are we talking about, north of San Diego. And it was actually built by the Santa Fe Railroad Company many, many years ago, and they imported ironbark trees from Australia. And planted them. It was a huge, huge tree plantation because ironbark's the toughest timber in the world, and they were growing these Australian trees to make the sleepers for the railway lines. And now most of those trees have been cut out, and I guess to those who don't know, it looks a lovely rural scene, but Oh my God, they're an awful ugly looking bloody tree. Anyway, another story. Um, this chap said, well, that's not a realistic aim. The banks are paying you 5 or 6%. You know, if you can make 8 or 9% a year, that's great. Well, you know, to me, that didn't sound that great. Just recently, talking to one of my chaps who's starting a Morgan Run golf course. That's it, Mike. You've got it. Morgan Run golf course. Yeah, Morgan Run. That was it. Yeah, we had 3 days down there. See, our guys know everything. That's Mike, our mad dentist from Chicago, one of our very best traders. He's a super gun trader. Did a tutorial at Los Angeles 2 years ago. Very, very good trader. Anyway, one of our new tutorial guys last week said to me, I don't expect to get rich. I just want to make some money to supplement my retirement. And I said, where'd you get that idea from? He said, I've done a number of courses. I'm realistic. I know what you can get from this business. And that's not true at all, folks. That's not right. And so much that's spoken about in this business is not right. In fact, the same guy was telling me that he was familiar with Fibonacci numbers. And I said, well, what are they? And he said, they come from the curl of a ram's horn or the inside the wall in your ear. And I said, where'd you get that from? He said, I read it. That's right. And of course, Fibonacci's are none of those. Fibonacci's are actually a ratio defined by the mathematician Fibonacci, who lived in Athens in 1200 something. His ratios were an in-joke, the mathematicians' joke to other mathematicians, and it was based on the breeding cycle of rabbits. It's actually about the fornication and birth rate of rabbits. But anyway, someone found out about fibs and wrote a book about it, and eventually someone said, well, let's see how they go on a chart, and they were sort of somewhere there, not terribly accurate, but somewhere there, so someone else wrote a book, and the books went on, and people accept that markets work on Fibonacci numbers, which they don't. Let's have a look at the various types of trading. We have to keep moving through here. And the most common form of trading, as you know, is buy and hold. And I can tell you it's no good. And that is the industry. That is 99% of the securities industry is stocks and shares. And you have an unlimited number of funds. And what you're seeing here, Morningstar is the company that monitors and measures all of these funds. And this is what they call the Morningstar medalists. These are the companies that got medals from Morningstar for being the best in their setup. So these are the very best funds in the world. And have a look at their 3-year averages in the right-hand column in a roaring bull market, which is what funds are based on the premise that markets go up all the time, which of course they don't, and to the extent they do, there's a whole lot of human interference and engineering in that. But you have a look at this. These are the medalists. These are the best in the world. You know, I mean, you're not getting 10% a year. Once you step outside, there's only one here at 9, a couple of 8s, a couple of 5s and 6s and 7s, and they're the best in the world. So you're never going to fund your retirement from investing in stocks and funds unless you get in opportunely at the right time. And that's always the example used. But the drawdowns kill the idea of compounding in stocks. Stocks actually don't compound. This next chart is very hard to see, for which I apologize. You should see it now. And this is all of the international equity funds. And they go from India equity at the top all the way down, diversified emerging, diversified Pacific, foreign large caps, foreign small caps, etc. And in the column on the right, you can see that these are no better. And these are the medalists. These are the very best that Morningstar could find. This is not the average. This is not the median. This is the best, folks. And have a look at them. There's a smattering of 7s, 1, 8, plenty of 4s, plenty less than 4. You can go to Morningstar and check this out for yourself. This is the whole industry. And honestly, from any objective view of it, it is absolutely pathetic. The returns are pathetic. I know the people running the funds get very rich, but you poor punters with your money in the funds do not. Okay, moving on. I still want to come back and talk more about this, but I wanted to read you, if I can minimize this, a note I got. This is the 9-dash line, which I told you last tutorial you ought to be very concerned about. This is China's claims to almost all of the South China Sea. This actually comes from the settlement after World War II. Remember, China was an ally, and they claimed that this was part of the armistice terms with settlement with Japan. I told you a bit about it a fortnight ago, and James, who's one of our clients, James Gillies, won't mind me using his name, he's a terrific bloke. He came to a tutorial in New Zealand probably 2 years ago, and let me see if I can make this smaller so I can read it to you. Okay, and he says, James here, enjoyed your last webinar, listening offline due to work commitments. I was in Zhangjiang this week and talking about plans for their deep water drilling prospects. He's a mining engineer. Deep water drilling prospects all around Hainan last year, including a dispute over the demarcation line with Vietnam. But that's the Chinese, will gradually, I'm sure, begin to push closer to the shore. It's not too long ago that Chinese warships shielded a drilling rig from Vietnamese fishermen, and they're certainly not afraid to show some weight. Relations with Philippines, Duterte, I don't know if that's how you say it, he's the new president, seem to suggest some negotiation will bear fruit, because these 9-dash lines take them into the normal definition of territorial waters for a great number of countries. Philippines claims their 12-mile zone, their 200-mile economic zone, fishing, oil, all sorts of good things in there, and China saying, it's ours. In Malaysia, recognition of sovereignty is thought to continue to inhibit Chinese and oil and gas companies winning tenders for East Malaysia offshore work. As for Brunei, I think the Chinese will leave Brunei for last. It's as dull as dishwater there and dry as the judge. It's a very strict Muslim country. It's impossible to get a drink there. We'll send snaps of a map I bought at the airport. I don't read Mandarin. I think it shows very clearly how the South China Sea islands, are firmly portrayed as integral parts of the country as a whole. James says he made a nice bit of cash riding gold down recently, reference to DC levels and Frank's fourth sealed guidance, keeping my eye closely upon it. That was back on the 10th. Thank you for that, James. Your local knowledge is just absolutely terrific. Thank you very much for that. Okay, let's see if we can assume where we were. So more on the 9-dash line. If this looks to you like a mess, these are the dashes here. This is sideways. This is the top, I think, and this is the bottom. I'm not sure. I put it up in a hurry, but I want to just reinforce that because I think we're going to hear a lot more about it, and probably sooner rather than later. Okay, let's move on. Russell, I want to point out to you that the whole point of what I've been talking to you about, my journey to find the Daniel Code, revolves around, firstly, the Daniel Code numbers. And we don't have a lot of time left, but this is the Russell chart, and it's headed Trading Without the Daniel Code Numbers. You can see as we went into Tuesday night, the market was down. I put a post in for forum people saying, watch what happens at rollover of these equities contracts because they're likely all going to reverse. But if you just have a look at the standard indicators, I say we don't use very sophisticated indicators. We don't need to. But you can see we've got on here a fast stochastic, a slow stochastic, and our proprietary momentum indicator. The markets had been oversold for 1, 2, 3, 4, 5, 6, 7 days before they hit their low. So on any of those days, you could have anticipated the turn if you were looking at stochastics or other studies of that sort. On 4 of those days, you could have anticipated a turn if you were using momentum studies, and ours is a proprietary one, but there are many others. But just looking at that chart, you don't have any high degree of certainty where markets are going to turn, and that's because they're missing the Daniel code numbers. So if you move on, this is the same chart. I just want to make sure it's changed for you. It has now. This is the same chart, but it's got the Daniel code numbers on it. And one of the numbers it's got on it is a retracement of the range from this high all the way down to this low. Now, this contract only rolled over recently. So you can see that anything before the beginning of March is just dots. There are some bars there, but many of them are just dots. That's just the closing price. In other words, there's so little turnover in this contract until it becomes the front month that all you're seeing is dots and dashes, and the green lines are just highlighting the gaps in this market. But have a look using the Daniel code retracement tool from the high to that low where I've drawn the red line to. I'll just give you some dates because this is so extraordinary. I'll just go to the other chart. I mean, it really beggars belief unless you know how the Daniel code works. The retracement is running from the high on 0301 down to that little half bar you can see at the end of the red line, which is November the 28th, 2016. Okay, so we had a little bit of trading, had a huge gap down from the previous dot, which was just the close. But that low, you wouldn't possibly think in your mind that any of that could be meaningful. But that's the retracement. That's the operating range, no matter how flaky it looks. And as you can see, one of the ratios that came from that is 1352, the black line, 1352.6, which stopped this move. And above that, you've got 1348, you've got 1358.4. Now, if you look at that closely, on 0309, which is this bar, it closed exactly on that number. The next day, it went a bit up and a bit down. The next day, which is this bar here, if you can see it, if not, it's 0313. The low of that bar is 1358.5 against the DC red line at 1358.4. All of that, folks, is target recognition. What the market is saying to you is, I know these numbers and I'm adapting to them. I'm using them. These Daniel code numbers are like magnets. Its market is saying to you, I know these numbers and I'm following them. So there was that little rally up, but look what happens the next day. This is what happened. The down bar, the lowest bar of them, this was Tuesday before the Fed came out with their announcement. Look where it went to. Low of that is 1350.7 against the Daniel code black line of 1352. So it's 1.3 or 13 ticks away from the blue line. But in a number of 1352, there's 10 ticks in each point. There's actually 13,520 ticks in that number. And this one's got a variance of 11. It's extraordinary. It's not the most accurate one you've ever seen. Lots of these we see hit almost exactly the number, plus or minus a handful of ticks. But that's what set up the TO3 buy signal. Now, this was extraordinary. If you think about the Fed raising interest rates, it was universally believed that would be negative for stocks. And that means interest rates going up means T-bond charts and 10-year bonds going down, because yield is the inverse of the chart that you see. Okay, but what in fact happened? Equities turned around and rallied like mad. Gold and silver rallied like mad. T-bonds rallied. We had buy signals for all of those markets. I don't know if anyone else had them, but that's what the charts were saying. And they were saying that because these markets were all at significant Daniel code numbers, and they had the other requirements for a turn already baked into them. Okay, let's move on. We're running out of time. The DC time trading game. The other part of trading from price is trading time. And this is exclusive to the Daniel code. People who've done a tutorial know about that. I showed you this part of this post the other day. I said 2 of our video tutorial students produced better than 30,000 returns in paper trading. Of course, paper trading has limitations. It doesn't account for slippage. It doesn't account for other fluctuations that happen in the market. But it is a very serious indicator of the possibilities inherent in trading Daniel code time signals. And let's think about if you've got only 60% or even 50% of these possible returns, you would be amongst the best handful of traders in the world. Now remember, you're doing this off daily charts, no live data. You can do it from your home or your office, wherever you want to. There's no sophisticated machinery. This is not HFT. This is not paying the exchanges huge amounts of money to locate your server in or very near their exchange, so you get the data before everyone else, which in my view should be called cheating. But this is simply trading off daily charts. And you can make so much money once you know how to do this. I generally don't tell people these numbers. I like them to find them out for themselves. And part of the process of doing a Daniel code tutorial is I ask you to trade at least a whole year of a number of markets on paper, because that's the only way you see all of the potential problems that can happen to you. Part of this question is selecting the right market. I know everyone's very fixated on the S&P. It's not a great trading market when it's in this continual bull session. For our sort of trading, which is 1 to 10 days, vertical movement both ways is king. And we really need to see that. And Tom, I know your partner's a very keen natural gas trader, and he kindly writes to me when he's had a good day and tells me how well he's done. You can't make money trading short term that you can make trading the way we trade. And here's just a couple of notes that have come in since the last lecture from guys who are doing the video tutorials. I put in just finished paper trading XX. It's not XX, so don't go looking for XX, guys. I've just hidden which contract it is because it's a interesting little futures market that some of us trade. It's massive, and this guy's paper trading 50,000 per one contract. Someone else, a different client, they're all doing the same course. I asked him to do natural gas for a year. He didn't have natural gas. He wants to trade Forex. He did USD CAD, $26,000 for 1 year, one contract. Same guy, I think this is Mark again. He lives in Central America, there, Midwest, Mideast. Mark, I might have got it wrong. I've also worked through KC, that's coffee, for half of 2016. I'm up over 16,000 per one contract. Did go through what felt like hand-to-hand combat. A lot of this does feel like hand-to-hand combat. When markets aren't moving, when they're consolidating, feels just like hand-to-hand combat. But the market does that because the market's job is to get 99% of people wrong. And once it's got them wrong, it will reward you, and it will reward you in amazing amounts of bounty. And finally, here is my summary for you. I call it Needham's heresy. If you know how to trade the Daniel code systems, you can make more money trading futures than any other legal pursuit that I'm aware of. There is no such thing as overtrading. We are in the market all the time. Practically, we might be flat for maybe 2 or 3 days in a year. We're in the market all the time because we're relying on the volatility in the markets to give us profits. And that's why we want to trade more than one market. We typically trade 2 or 3 markets. Tom, I want you to talk to your partner up there in New York about this. You can make more money trading the Daniel code off daily charts than you'll ever make trading off, intraday charts. Anyway, whether you can believe me or not doesn't really matter to me, but I would like all our clients to be as prosperous as they possibly can be. Price signals are ambiguous. DC numbers bring the certainty. We trade off daily bars with no real-time data. We do use delayed real-time data, usually 15 to 20 minutes delayed, and the only reason we use that is so that we can do a stop and reverse if an outside bar occurs. Apart from that, we don't look at charts at all during trading. Do your analysis, put the order on, go away, go to work, go and play golf, go for a swim, go for a sail, go ride a horse, go have lunch with your lady friend, do whatever you want. You only need to look at your chart when you get your end of day download, and once you know how to do that, it shouldn't take you any more than an hour to analyze 4 or 5 markets and put your orders on. It's cheap, efficient, and stress-free. It is the ultimate lifestyle. If I told you I'm sitting here on a glorious summer's day with the Pacific sparkling outside, and as soon as I finish with you folks, I'm going to wander out to the pool. If I want to, I could drive 2 kilometers and be in the Pacific Ocean. Life's that easy. I've done my work. I did it this morning when I got my end-of-day download. Okay? Peter says, surely the use of DC values intraday is more efficient and lucrative. Peter, it is not, and you can't get close to it. And, mate, I have traded everything from 3-tick bars up to anything combination you can think of. I spent years doing intraday trading. The reason that the way that daily trading makes so much money is because now and again you get the big runs, and you can stay with the big runs when you understand the DC systems. Okay, so here's a little note from Janet I have made. She's also doing a tutorial. Only 12,000 on small stops of 300 to 500. This prevents large gains, which is necessary for my small account, but prevents large loss. So here's another story. Janet's done 3 tutorials. Lovely lady, great friend of mine. Hope you're feeling well, Janet. Hope your broken ankle's healing. And Janet is she's an accountant, and she lives in the west coast of Canada, and she's particularly averse to losses. So we've talked about, and she's worked out a system using the Daniel Code method, and she uses very small stops. She uses $300 to $500, but she's made $12,000. So she's given away a lot of the upside, but it's still very, very good. $12,000 per one contract on any market is very good. Well done, Janet. Ankle's good. Happy to hear it. Okay, so there's Needham's heresy. It's the opposite of almost everything you know about futures trading. I do urge you to get into it. I do urge you to start at the Daniel Code website, where you can have a free trial. Remember, the Daniel Code website is just an introduction to trading. It gives you some of the market turns. The fourth seal gives you much more in-depth analysis of trend, and we give you some of the continuation signals, but it's by no means a complete trading service. If you want to be a top trader, come to a tutorial. We do them live occasionally, nothing planned at the moment, or you can do a video tutorial with me at any time. But I do really want to tell you that the real truth about trading is different to anything you've heard. And I hope this will inspire some of you and get you to tell your friends. That's pretty much us for the day, folks. I hope you enjoyed that. Hugh enjoyed it. Thank you, Hugh. Glad you enjoyed it. It's pretty warm here, folks, so I'm off for a swim and the usual Friday Bloody Marys. My trading day is done. I don't have to do anything until I see the end of day results for when Friday's trading closes. It's Friday down here, of course. Don't forget we're half a day ahead of you here. Sue, thank you, darling. Glad you enjoyed it. Janet, wonderful to have you with us. Sue, we better talk next week. I suppose you've had some rain up in Cairns, eh? Probably a lot. Tim, lovely to hear from you again, my friend. All right, folks. Well, thank you for being with us. I hope to see you again in 2 weeks. What's Rolf say? Hello, Rolf. Haven't seen you for a while. 30 here in Dunedin. Just missed John. Just off the plane in New Zealand. It's recorded, Rob. It'll be on the website in about 12 hours for you, mate. No rain in Cairns. God, we got flooded down here. Rob H. over in New Zealand, my mate. Good to hear you're still with us, Rob. So thank you, folks. All the best, and I'll look forward to our next meeting, which should be in a fortnight. If there's anything dramatic happens in the meantime, we'll pull on a webinar at short notice, so keep an eye on the website. Okay, thanks for being with us, folks. We'll look forward to seeing you the next time. Bye-bye.